Good afternoon. Since the previous meeting of the Monetary Policy Committee, the sharp decline in international oil prices has contributed to a more benign global inflation environment. This development may also ameliorate the deteriorating growth outlook in some regions by providing a boost to consumption expenditure. Lower oil prices have also had a favorable impact on domestic headline inflation, with the medium-term forecast improving relative to the previous forecast. However, the underlying inflation pressures, as reflected in core inflation, persist. The domestic growth outlook remains challenging, but after 2 quarters dominated by the fallout from extended strikes, some recovery is expected, though demand remains subdued. The coming quarters are expected to see an improved performance in the mining and manufacturing sectors, but the outlook is inhibited by domestic structural constraints, as well as by a weak global economy and the continued declining trend in non-oil commodity prices. Growth next year is expected to remain weak. The year-on-year inflation rate, as measured by the Consumer Price Index for all urban areas, measured 5.9% in both September and October, having measured 6.4% in August. Downward pressure on inflation in October came from continued moderation in food and petrol prices. Food price inflation continued its downward trend, measuring 8.0% in October, down from 8.7% previously, while petrol prices increased by 2.4%. Core inflation, which excludes food, petrol and electricity, moderated to 5.6% in September from 5.8% in August, but measured 5.7% in October, reflecting primarily continued exchange rate pass-through to some goods categories. Administered price inflation, excluding petrol, measured 6.4% in October, down from 6.5% in September. Headline producer price inflation for final manufactured goods, which reached a recent high of 8.8% in April, measured 7.2% and 6.9% in August and September, respectively, driven in part by lower food and fuel price inflation. The bank forecast of headline inflation has improved since the previous meeting of the MPC, mainly due to the impact of declining international oil prices. Having reached a peak of 6.5% in the second quarter of this year, inflation is now expected to average 5.9% in the final quarter of 2014 and averaged 6.1% for the year, compared with 6.2% previously. The downward trend is expected to continue into next year, with inflation forecast to reach a low of 5.1% in the second quarter and to average 5.3% for the year, compared with 5.7% previously. The forecast for 2016 has been revised down from 5.8% to 5.5% and is expected to measure 5.4% in the final quarter of this year. The forecast for core inflation, by contrast, is more or less unchanged at an average 5.6% and 5.7% in 2014 and 2015 respectively, reaching a peak of 5.9% in the first quarter of 2014, previously 5.8%, and is expected and moderating to 5.3% in 2016, down from 5.5% previously. The MPC assesses the risk to the headline inflation forecast to be broadly balanced. The results of the fourth quarter inflation expectations survey of the BER will only be released in December. Market-based surveys, as reflected in the Reuters Econometer survey, however, show that the median CPI inflation expectation of analysts has remained unchanged over the past 2 months at 5.7% and 5.5% for 2015 and 2016 respectively. Break-even inflation rates which is the yield differential between conventional bonds and inflation-linked bonds, declined since the previous meeting and reflect expectations within the target range for 5-year maturities and marginally above the upper limit of the inflation target range at the 10-year maturities. The US and the UK remain the main drivers of global growth, although more broadly, global growth may get some impetus from lower oil and food prices, which should provide some boost to consumers. US economic growth was better than expected in the third quarter, with the first advanced estimate of 3.5% and the unemployment rate declining to 5.8%, the lowest level since June 2008. The UK recorded growth of 2.8% in the third quarter, while the unemployment rate was unchanged at 6.0%. The Japanese economy contracted for a second consecutive quarter during the third quarter and has prompted a reconsideration of a further VAT increase next year. The response to the further additional monetary stimulus announced recently remains uncertain amid a tighter fiscal policy stance. The Eurozone outlook also remains bleak, including in the core countries such as France and Germany, although lower food and oil prices coupled with further monetary easing may have a positive impact. The outlook for emerging markets is mixed, with emerging Asian economies expected to benefit most from the positive spillovers from the US recovery. This is expected to offset in part the adverse impact of the slowdown in China, where growth is expected to be lower than in the past few years as the economy rebalances away from investment towards consumption. This moderation is expected to continue to impact negatively on commodity prices. The Indian economy is showing signs of sustained recovery, while the other BRICS partners of Russia and Brazil face significant growth headwinds. Oil exporters generally are expected to face challenges from international oil price weakness. Global inflation is expected to moderate in the face of benign food price inflation and falling international oil and other commodity prices. While this is welcome in the higher inflation regions, particularly emerging markets, it does aggravate deflationary risks in some of the advanced economies, particularly in the Eurozone and Japan. Monetary policy stances are expected to remain ultra-loose in these two regions, with a significant stimulus package announced recently in Japan, and the ECB is anticipated to conduct further asset purchases. The US Fed has ended its program of quantitative easing, but at this stage, it is not contracting its balance sheet, and proceeds from maturing assets are being reinvested. Although the general expectation is that the US Fed will begin raising interest rates in mid-2015, there are also some expectations that the more benign inflation outlook could delay this. Forward guidance from both the Bank of England and the US Fed is that any adjustment is likely to be gradual and policy rates may be lower than their estimated long-run normal rates for some time despite the improved growth outlooks. Since the previous meeting of the MPC, policy rates have increased in Brazil, Russia and Indonesia, but reduced in Sweden, South Korea, Chile and Poland. The exchange rate of the rand has been relatively volatile since the previous meeting. In response to external and domestic factors, including changing expectations of the timing of the first US interest rate increase, as well as the downgrade of South Africa's credit rating by Moody's Investor Services. Although the rand initially weakened sharply against the US dollar, at one stage reaching a level of 11 rands 36 cents against the US dollar, This move has since largely been reversed. Since the previous meeting of the MPC, the rand has depreciated marginally against the US dollar, but appreciated by 2.1% and 3.5% against the euro and sterling respectively, and by 1.8% on a trade-weighted basis. The rand is expected to remain susceptible to sudden shifts in sentiment regarding changes in monetary policy stances in the advanced economies, and the continued uncertainty regarding the extent to which US normalization is already priced into the exchange rate. The asynchronous nature of advanced economy monetary policies is expected to complicate the outlook and outcomes. However, the rand is likely to remain more sensitive to changes in financial conditions in the US than in Japan and the Eurozone. The persistently low adjustment of the current account deficit also makes the rand vulnerable to swings in sentiment that raise concerns about the financing of this deficit. Although the lower oil prices should reduce the oil import bill, its positive impact on the deficit may be limited by further declines in other commodity prices. The volatility in portfolio capital flows is indicative of fickle global investor sentiment. Net bond sales by non-residents amounted to 12.6 billion rands in September and 2.1 billion rands in October, and a further 1.5 billion rand to date in November. In the equities market, having been marginal net sellers in September, non-residents were net buyers to the value of 5.7 billion rands in October, but net sellers of 6.3 billion rands to date. The domestic growth outlook remains subdued. Although an improved growth outcome is expected in the third quarter, following the 0.6% growth in the second quarter, this is off a low base following prolonged strikes in the mining and manufacturing sectors. The bank's forecast for GDP growth in 2014 has declined marginally from 1.5% to 1.4%, and forecasts for 2015 and 2016 have been revised down from 2.8% and 3.1% to 2.5% and 2.9% respectively. This restrained outlook is consistent with the bank's composite leading indicator of economic activity, which continues to trend sideways with a slightly upward move recently. The RMB BER Business Confidence Index improved in the third quarter, but at 46 index points remains below the neutral level of 50 points. The mining sector appears to be recovering to some extent from the strike-affected first half of the year and is expected to contribute positively to third quarter growth following 2 consecutive quarters of contraction. The physical volume of mining production increased by 0.7% in the third quarter compared with the second quarter, and further increases can be expected in the final quarter as platinum output is still below pre-strike levels. By contrast, although the physical volume of manufacturing production increased in September, the month-long strike in the steel and engineering industry in July contributed to a quarter-to-quarter contraction of 1.3% in the third quarter. Sentiment indicators suggest that the outlook for the sector remains bleak, with the manufacturing confidence index still at very low levels and capacity utilization rates back at 2011 levels. More positively, the Kagiso PMI edged above 50 index points in October for the first time since March, driven mainly by the inventory and sales orders sub-indices. The outlook for the construction sector is more positive, with the real value of building plans passed increasing for the 4th successive month in August. On a 3-month to 3-month basis, an increase of 9.8% was recorded. However, while the various building confidence indices have generally improved, they remained below the neutral level. The weak pace of economic growth is mirrored in the unemployment rate, which, according to the quarterly Labour Force Survey of Statistics South Africa, measured 25.4% in the third quarter, compared with 24.5% a year earlier. Total employment increased at a year-on-year rate of 0.5% in the quarter. At the same time, the number of discouraged workers increased sharply by almost 100,000 and now total 2.5 million. Consumption expenditure by households has remained relatively subdued, but there are signs of a moderate increase in the quarterly growth rate as the negative effects of the protracted strikes on consumption dissipate. Consumption expenditure could be positively impacted by lower petrol prices. Although retail sales growth declined by 0.8% non-annualized in September, quarter-to-quarter growth of 0.9% was recorded in the third quarter and 2.3% year-on-year. Similarly, wholesale trade sales contracted in the third quarter but increased by 5.9% on a year-on-year basis. Motor vehicle sales have also shown some signs of recovery. Although domestic sales are expected to be lower this year than in 2013. Real sector confidence improved, with the BER reporting retailer confidence above the neutral level for the first time in 2.5 years. Consumer confidence, however, declined significantly in the third quarter following an unexpected increase in the second quarter. Trends in bank credit extension to the private sector have remained characterized by declining growth in advances to households, while advances to corporates have been buoyant. Total loans and advances grew at a 12-month rate of 8.8% in September, but excluding mortgages, the growth rate was 13.5% compared with a recent high of 18.6% in December 2012. Credit extension to the household sector grew by 3.7% in September as unsecured lending remained weak despite a reversal of the negative growth trend in the month. But credit to the corporate sector grew by 15.3%. 12-month growth in mortgage advances to households remained at levels below 3%, while installment sale credit and leasing finance continued its downward trend with growth of 6.9%. These trends are likely to constrain consumer demand in the coming months. According to the October medium-term budget policy statement, government remains committed to its policy of fiscal consolidation in order to prevent an increase in the debt ratio to unsustainable levels. The fiscal deficit is expected to decline from a projected 4.7% of GDP in the current fiscal year to 3.0% in 2017-2018. This is expected to be achieved through adherence to a nominal expenditure growth ceiling and increased tax revenues. The ability to achieve the nominal expenditure targets will be determined to an important degree by the public sector wage settlement. Wage trends remain unchanged since the previous meeting of the MPC. According to Andrew Levy employment publications, wage settlements rates have averaged 8.0% in the first 9 months of the year. Nominal remuneration per worker, as well as productivity trends in the formal non-agricultural sector, were distorted by the significant increase in temporary employees by the Independent Electoral Commission, which contributed to the decline in the year-on-year increase in remuneration from 6.3% to 3.5%, while productivity declined by 1.6%. The net result was a marginal increase in unit labor costs of 5.2% in the second quarter from 5.1% previously. Food price inflation remains a major driver of inflation, but is expected to continue to moderate in the coming months. Food price inflation appears to have peaked at 9.5% in August and has since moderated to 8% in October as lower producer prices of crops and cereals, which declined by 6.3% in December, are beginning to have an impact at the consumer price level. Restocking of herds following the drought last year, however, has kept meat price inflation elevated. Food price pressures also remain benign at the global level, with the Food and Agricultural Organization International Food Price Index declining for 7 consecutive months to its lowest level since August 2010. International oil prices have declined markedly since their recent peak in June of around $115 US per barrel to current levels of below $80 US per barrel. This decline reflects a combination of factors, including increased supply coming from the US and Libya, moderating demand from China in particular, and changes in the internal dynamics within the OPEC cartel. The general expectation in the market is that these lower prices could persist for some time, although some of the advantage of lower international oil prices has been offset to some extent by a weaker rand exchange rate. Domestic petrol prices have declined by a cumulative R1.17 per litre since August, and should current trends continue, a further decline of around 70 cents per litre can be expected in December. The marked decline in the international oil prices has had a significant impact on the medium-term outlook for headline inflation in the global economy and in South Africa. At this stage, it is unclear whether this is a temporary shock or if it is to be sustained or decline further. As with an oil price increase, we would look through the impact effect and focus on the possible second-round effects of this decline. The possibility that oil prices are sustained at current levels introduces a degree of downside risk to the inflation forecast. The domestic growth outlook remains challenging, and the risks to the forecast are assessed to be moderately on the downside. The MPC does not see significant signs of excess demand pressures that are impacting on the inflation outlook, and household consumption expenditure is expected to remain constrained. At the same time, despite its recent relative stability, the exchange rate remains an upside risk to the inflation outlook, vulnerable to changing perceptions of the timing of global monetary policy adjustments and the slow pace of contraction in the current account deficit. To the extent to which policy normalization is already priced into the exchange rate is also unclear. A further upside risk to the inflation forecast comes from a possible increase in wage settlement rates in excess of inflation and productivity growth in the coming year. In light of this assessment, the MPC sees the overall risk to the headline inflation forecast to be more or less balanced. However, given the elevated level of core inflation and the fact that inflation is expected to increase later in the forecast period as the first round effect of the oil price decline dissipates, the committee remains vigilant and will continue to monitor developments closely. The committee remains of the view that interest rates will have to normalize over time. However, given the lower trajectory of headline inflation and the continued weak state of the economy, the MPC has unanimously decided to keep the repurchase rate unchanged at 5.75% per annum at this stage. The timing of future interest rate increases will be dependent on a range of factors, including the evolution of inflation expectations, the speed of normalization of monetary policy in the US, and the state of the domestic economy. I will at this stage be open for questions, and we would like to take questions in bunches of 3, and then I will decide which member of the panel will respond to which question. Say, as usual, identify yourself and the media house that you come from.
Helmo Preuss, the BRICS Post. Governor, can you tell us what was the dispersion of the inflation forecasts 2 years out, and which one was the lowest and which one was the highest?
Ma'am?
Afternoon, Governor. My name is Nzakisi. I'm from the Business Day. If next year monetary policy normalization in the U.S. happens, could we again see rate hikes of above 25 basis points next year? Thank you.
Renee?
Good afternoon, Governor. Linking to what Nzakisi just asked, the SARB is again placing a lot of emphasis on interest rate normalization, as you mentioned. I mean, should a struggling economy like South Africa be preempting a country like the US? I mean, their interest rate moves when we speak about normalization.
Helmo, I was not sure when you talked about the dispersion of the forecast. Are you talking about our dispersion? That's the only one that we can. That's the only one that we can talk about. For 2014, we see an average of 6.1%, 5.3% in 2015, and 5.5% in the 2016. So now, when you want to talk about the
endpoints, your different models.
you are looking at the Fen chart. Well, next week or so, we are having the MPF, and we will publish the Fen chart, and you will get the exact answer at that meeting. Nzakisi, the normalization and whether we will hike next year, if you wait until next year's MPC, you will know exactly what we would do next year. So for today, let us confine ourselves to today's MPC. Suffice to say that we have put in a forecast for inflation over the this year and for the 2 years out. And as we had said, we will continue to vigilantly monitor developments. And when the MPC meets, we will deliberate and make an appropriate decision. Renee, should a country like South Africa preempt the US? Well, it would be very nice to have monetary policy only made in South Africa. When the MPC meets, we analyze global trends, and we also analyze domestic economic trends. And based on what we see as emerging trends, we then make an appropriate decision in terms of policy. The issue of preemption or otherwise, I do not think that it's a useful discussion to say that you will preempt the US, because you do not know what the US is going to do. As we say in the statement, we are still even uncertain as to whether the US will begin to increase interest rates in the first half or in the second half, and the views are actually different out there. Shall we take anything that anybody wants to add? Can we take the next round of 3 questions? Ma'am. Here.
Nompumelelo Siziba from SABC TV News. Governor, I wanted to ask you, to what extent did you consider the midterm budget announcement by Finance Minister Nhlanhla Nene that South Africans can expect some sort of tax hikes, and to what extent does that influence your decisions? Because if you increase interest rates, we're sort of being double taxed, if you like.
Miriam.
Good afternoon, Governor. I'm quite struck by the fact that for the first time in a very long time, the MPC judges the risks to the inflation outlook, at least for headline inflation, to be balanced. And I was wondering, I mean, at the risk of repeating earlier questions, does this sort of raise the chance that possibly the normalization that we've expected might be delayed somewhat, regardless of what the U.S. does?
Say.
Tsepo Mongwae, SABC Radio News. On the issue of normalization, to what level should we say that, at what level should we say that things have normalized? My second question is, if governor would be introducing things or doing things differently from the previous governor that maybe we should expect?
Yes, ma'am.
I'm Ogelang Bata from Bloomberg News. My question is whether the MPC considered the rebasing of the GDP in the forecasts.
Okay, the first question had to do with the consideration of the MTBPS. Well, obviously, the fiscal stance is very important to what is going to happen to the economy, and we look at that very closely. I do not remember Minister Nene talking about tax hikes, but you can go up 240 Madiba Street to ascertain whether there will be tax hikes or not. With the interest rates are an additional tax. Interest rates are a very interesting instrument. If you don't want to pay interest, just don't borrow. It's straightforward as that. And for us as a nation that is savings shy, for those who are seeing are having savings somewhere, I guess when interest rates go up, they do ululate. Bear in mind there are people who are living on fixed income, mainly pensioners, who write us lots of letters telling us how we are squeezing their income with the level of interest rates. So let's just get that one out of the way. Interest rates are not a tax. Miriam, the risks to the inflation are balanced. Could we see normalization being delayed? Well, we say that the view of the committee remains that interest rates will have to normalize over time. Now, you're saying, will you do it in spite of what happens in the U.S.? It is very, very difficult to ignore the effects of the normalization in the United States. There is no doubt that the normalization of interest rates in the U.S. or the normalization of monetary policy in the U.S. will have an impact on the South African economy. There are a number of channels. The most obvious channel is a channel via the exchange rate. And the second channel is via a repricing on South African financial assets, and thus an impact on capital flows. So you can't ignore what happens in the United States. And in any analysis of trends, you are going to necessarily have to take into account what it is that is happening with the global economy. And the U.S. is a very important chunk of the global economy. And I guess your question, well, that means I have dealt with Tsepo's question of normalization. What is it that I would be doing differently? Nothing. There's been a solid foundation that had been laid. I will build on that foundation. But if, Tsepo, you didn't notice that for the first time in the MPC statement, we decided to disclose how the voting has gone. Your editor must have a problem. Rebasing of the of GDP, we don't know what that rebasing is. Once we know what it is, we will factor it into our growth forecasts. Any other questions? New hand there, right?
Angelo Coppola from China Central Television. Governor, how concerned is and was the committee around the public sector wage negotiations and the fact that it's likely or possible that their increases will be above inflation? How did that factor into your determination?
Helmo? Yes?
Change in terms of gender equity in terms of the MPC?
We will deal with that once we are finished with the business of the MPC. Yes, ma'am.
My question actually is riding on his question. We can't not notice the vacant chair there. So is there any indication on when a deputy governor might be appointed?
Okay, that also was not discussed in the MPC, but any other questions that are MPC related, and then we can deal with this. Candice?
Question from Razia Khan. Headline inflation forecasts have improved on lower oil, but core forecasts have not altered much. Given the weight that the MPC places on core inflation and its impact on inflation expectations, how much will headline CPI forecasts matter to future policy decisions?
Okay, last question. So it looks like we have dealt with yeah. Okay, thank you very much. Angelo, the impact of public sector negotiations, we really wished we could factor it in, but we don't know what the settlement would be. And I think that you might have also been aware that in the budget policy statement, the Treasury did allude to the fact that the risk to that framework is what the settlement in public sector wages becomes. But at the moment, we do not know what it is. So that is where I would end it up. Razia, the question of the weight that we place on core, no, we're not sure. I'm not sure that you could say that we are placing a weight on core. We are targeting headline inflation. We do watch core though, because core does tell us whether there are any other generalized inflationary pressures outside of food and energy prices. And in the most recent release, although there's been a slight uptick in core is still less than in the previous 2 months. And our forecast over the next 3 years is that we see core at 5.6% average this year, 5.7% in 2015, and 5.3% in 2016. So even core is expected to remain within the target range. Deputy Governor. The Deputy Governor, the President must apply his mind and make his decision on the next Deputy Governor. Gender equity. Well, I guess the President has an opportunity to rebalance what we have here. And it's interesting that you only notice now that there is a gender imbalance here. But how unfortunate am I that in 2004 I appeared before Parliament and I succeeded a woman as the DG of the Treasury. And when I arrived there with deputy DGs who are men, they asked me, where are the women? And for all of those years, there was a woman leading this group of men, and they didn't realize that there were no other women. In the past MPC in September, my predecessor stood here to read the statement, and she was not asked if where are the women on the committee. But I will not hold it against you. It is an opportunity to rebalance this committee. That concludes the business of today. Thank you very much, ladies and gentlemen, unless the panel here wants to add anything. Thank you.